Hello everyone, welcome back to Alice Blue's YouTube channel. In today's video, we will discuss the falling wedge. The falling wedge is a chart pattern that typically forms within 15 to 20 candles, where you can easily identify a breakout. Although the falling wedge represents a bullish reversal, it can definitely offer you a good buying opportunity. Before understanding this chart pattern, we need to better understand the theory behind it, the Dow theory. If you're new to this channel, please make sure to subscribe and turn on the bell icon to receive regular updates on our upcoming content. So, according to the Dow theory, a bullish trend and bearish trend can be identified based on market price movement. Here, I've outlined some patterns. You can observe here that a bullish trend is marked by higher highs and higher lows. After the lows are formed, the subsequent highs are higher, and similarly, the lows also form higher as compared to the previous low. This indicates that the current high will be above the previous high, and likewise the lows will be higher than the previous lows, which results in a bullish trend. Similarly, in a bearish trend, the highs and lows form in a way that the current highs are lower than the previous highs and the current lows are lower than the previous lows. This is how Dow theory functions. In the falling wedge pattern, the Dow theory plays a significant role. We can observe a formation of lower lows and lower highs in this pattern. Here, I've created a pattern that we will call price action, and we can see the falling wedge chart pattern forming. Let's understand this. Continuously, the highs are forming lower and the lows are also gradually becoming lower. However, when observed through momentum, the lows are weakening. This means the lows are either similar or new lows are not being created. Along with this, a breakout point appears, where price action breaks out, and we see a good trend with momentum, providing us an opportunity for buying. So, let's explore how to trade in this pattern, where to keep its stop loss and its methodology. As mentioned earlier, this chart pattern typically appears within a group of 15 to 20 candles. So, time frame management becomes crucial. The momentum will depend on the time frame in which you identify this pattern. The larger the time frame, the more output you will get, and the smaller the time frame, the less output you'll see. But the risk to reward ratio will remain similar. The risk to reward ratio could range from 1:3 to 1:5, and you will experience trends with strong momentum. Now let's take a look at the falling wedge chart. After a bearish trend, we see lower highs and lower lows forming. When you observe the lows, you'll notice that they are similar and new lows are not forming, indicating weak momentum. This is a clear example of weakening momentum and weakening lows. At the breakout point, we get a breakout, which leads to a strong bullish momentum with a buying point. For the buy entry, we will use trend lines. When the lower high trend line is broken, it provides an excellent entry for a bullish momentum, and the stop loss will be at the previous support level. Most of these types of patterns, when identified within 15 to 30 minutes, offer a potential swing where you can capture significant momentum. The time frame plays a vital role here. If you are using a 15-minute time frame, the output will be smaller, but on a 30-minute time frame, the output doubles. This means you can capture larger swing and the trading opportunity improves because the trend is likely to reverse. And we might observe trend continuation chart patterns. In the same chart, we may also see a pole and flag-like pattern, after which a strong continuation of momentum could follow. I hope you have gathered essential information on the falling wedge pattern. And don't forget to subscribe to Alice Blue's YouTube channel and turn on the bell icon to never miss out on any updates from us. Thank you.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.